The 504 typically on real estate is more advantageous. Here's the difference. The 504 only funds the hard assets of the business, including real estate and the equipment and things like that. Whereas the 7A is more geared for business acquisition and blue sky, intangible type stuff, but it can also fund real estate.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Beau Eckstein.
Hello, and welcome to another episode of the Investor Financing Podcast. I'm your host, Beau Eckstein. And on today's show, we're going to talk about the SBA 504 timeline for construction projects and approval. All right, let's start on this one. So oftentimes I'll get a call from a business owner who's looking to expand their business, and they're looking to buy a building to move in and occupy at least 51% of the building, which is SBA guidelines, right? You have to occupy 51% of the building space. A lot of times they're going to buy a shell or a building with no tenant improvements on the inside. So we're also able to finance those TIs, tenant improvements. But let's kind of backtrack here on the process of sizing this up and seeing that one is that you're probably going to be eligible and get approved. Obviously, you got to have good financials. Your business has to have 2-3 years of previous experience. We always ask for 3 years previous tax returns, personal and business. 413 form, which is a personal financial statement. We also want to see a global debt schedule. Any other businesses, you're going to want to have to provide your tax returns. But really what that process is the initial application and due diligence checklist is fairly easy. It goes to the lender, and there's various lenders that fund SBA 504s, both bank and non-bank lenders. And it's just really about determining out of these banks and these lenders who has an appetite for this type of asset or property type. Or business in general. Some banks prefer certain asset classes, other banks are more generalized, but some really do specialize. Once the bank is identified, we put together the package, the summary of documents we need. Typically within a week to 2 weeks, we're looking at getting an LOI, a letter of interest from the lender. At that point, it's really about identifying a CDC, which is the third party kind of nonprofit that works hand in hand with the SBA. They need to be on board with it. They basically package up their piece of the loan, because there's the bank loan and then there's the CDC loan, which is the second. Until there's certificate of occupancy, that bank is funding the first and second piece. So 50% is the conventional piece, and then 30 to 40% is the CDC piece. But the CDC does not buy that piece until certificate of occupancy. There's a little bit of a process, but the bank needs to get confirmation that SBA CDC has approved the loan, right? Because they're not going to fund it until they know that they're going to be able to sell it to SBA or CDC rather.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Are you in the market for a commercial loan? Did you find the perfect opportunity but need funding? Have a special situation? At Find the Bank, you will get quotes with competitive rates and terms from multiple lenders without any hassles. Have a multifamily property, construction project, owner-user property, industrial, mixed use, hotel? At Find the Bank, you can get nearly any kind of commercial financing. The process is simple. Once you send us some information about you and your property, we send back a quote sheet. Then we quickly connect you with an advisor. You won't spend hours calling multiple banks trying to find the right person to talk to. We'll connect you fast to the right person, hassle-free. Better terms than you could get on your own. Go to findthebank.com and complete the form. An advisor will be connected with you within minutes to discuss your specific financing needs.
Anyhow, that's pretty much the process, but really what it comes down to is the basic sizing. Once you get your initial needs list over to the lender, they go through it. They might need a few more documents, back and forth a few times. They produce the LOI. At the same time, there's some conversations happening with these CDCs to make sure that they're on board with the project too, because without the CDC SBA approval, you're not really going to go anywhere. Case in point, I have a deal I'm working on right now, and they had CDC with a lot of interest in this construction project, but they couldn't find the bank piece. I was able to come in and get the non-bank SBA 504 lender on board, and we're pushing that one through. So it's a combination of bank and CDC being on the same page and working together. And that's kind of where my niche is as a commercial mortgage advisor, is being able to piece these deals together and make them work, because not every bank is the same. But the general timelines, I would say, from the time you submit a full initial package, it's about 2 weeks or less for a letter of interest, assuming you have all the documents they need. And then from there, once the CDC package is up, it's an additional 4 weeks, give or take, to get SBA approval. So these are like 60 to 90 day deals right now, and they are busy right now with all the PPP that was happening. There's a backlog. So just expect it's going to be a little bit of a timing thing for you. So when you're working with your commercial real estate broker and they're looking for properties, it's not like we're going to get this done in 30 days. Now, an SBA 7A sometimes can get done in 30 days. But the 504 typically on real estate is more advantageous if you can go that route. Not every time, but usually on these type of projects. The 504 only funds, here's the difference. The 504 only funds the hard assets of the business, including real estate and the equipment and things like that. Whereas the 7A is more geared for business acquisition and blue sky, intangible type stuff, but it can also fund real estate. So it's very versatile, and that's why sometimes you'll use the 7A over the 504 for commercial real estate. Anyways, hope you enjoyed this episode. I look forward to seeing you on the next episode. Please like, subscribe, and I will see you soon. And there's a couple different playlists here. Be sure to check it out.